All right, welcome into another daily editorial here on the KE Report. Chatting with Jordan Roy-Byrne, founder and editor of the Daily Gold. Jordan, let's focus first and foremost on the gold price. Gold over the last couple days has been fighting to stay above 1450, and over the last couple days, for a matter of really minutes, broke below 1450 and quickly recovered. Today, gold is moving a bit higher, giving itself some breathing room above that level, currently up about $10. How important is it right now for gold to hold at least this first support level of 1450?
Well, I would say it's important on an hourly and maybe a daily basis, but as far as like long-term charts, it's really not that important. Gold was a little oversold in the short term, and if you're looking at the daily chart, you could clearly see that the next key level was in the 1440s, and so gold was a little bit oversold, and it formed a nice bullish hammer yesterday, and it rebounded not strongly. It rebounded off that hammer. I was going to say the miners rebounded more strongly. But so it's a good bounce in gold, but I'm still concerned, Corey, with the relatively high net spec position in gold. It only came down as a percentage of open interest in the last reading to about 46.9%. On Friday, which the data will be as of Tuesday, that'll probably be a little bit lower, closer to 40%. But in the 2000s, Corey, I went and looked at various lows in gold and where the net spec position was. I mean, numerous times it was like 20 to 30%. Now, that doesn't mean that it has to go to 25 or 30%, to make this next low in gold, to make a low that's going to be sustained and bring about the next big move higher. But just with the net spec position basically at 46%, there's still some spec longs there that have to be cleaned out. And that's in the last couple of months, every time we've seen like a good move in gold for a day or two, it's been sold. And that's because the specs, there's too many specs in the market. More time is required for them to get cleaned out, but it'll happen.
Now, what about the argument here, Jordan, that gold has already broken out and this could be kind of more of a bullish market for gold? So maybe the net spec position doesn't need to get quite as low as it has at some major bottoms because, you know what, we already had a major bottom and now it's more of an uptrend figuring out the next move higher.
Well, the issue with that argument is I was looking at, if we're talking about bull markets, and you look at the 2000s, there were numerous times where the net spec position during corrections got down to 30% and even lower than that. Numerous times it got down to 25%. So even in a bull market, during a correction, the net spec position came down to 30% and lower. And, we're not that far away from that, but just looking at the technicals in gold and where the net spec position is, to me, it's just more likely than not that we're going to see gold come down and test 1400, maybe 1393 where the 200-day is. But, I'm more encouraged by what's going on in the miners, Corey, so I'm not that worried about what's going on in gold. I mean, if it was going to have this short correction and a rocket higher, it probably would have already done so. Instead, in the last couple of weeks, it failed at 1520 and it's come back down. If gold was able to break above 1520, then that would be a signal that was ready to make the next leg higher, even with the higher net spec position. Because sometimes that can happen where commercials are the ones who are forced to cover because the market is so strong, and that's happened a couple times in the 2000s. But I don't think we're anywhere close to that kind of a market yet. We could be in a year or two, but for here and now, the short-term trend, despite that, the very short-term trend is probably up. But beyond the rally that we got, or the rally that we're getting today and the reversal yesterday, beyond that, the trend is more likely than not to the downside, and more spec longs are going to need to be cut.
Okay, that's interesting. But if we could get to, let's say, 1520 in the gold price, then that would make you reconsider. But overall, still think that we could be testing out that 1400 level. Now, as you mentioned, the stocks have held up pretty well. Even the silver stocks have held up better than really the gold stocks or anything else in the precious metals sector. How important is that to continue? And explain to us why you're not seeing that same sort of weakness in the gold stocks that you are in the actual gold price.
Well, this is a leap of faith, but I don't think it's that extreme. But if we look at the huge 6 and 7 year bases in GDX and GDXJ, especially GDX is preparing for a massive breakout, and it's also correcting that huge advance it had over the summer. And the fact that the miners are holding up better and they're starting to outperform gold even during this larger correction, it's just a very positive signal that we're not going to see that much more of a correction here, as far as whether it's in price and time, probably more so in price. But they're just holding up really well. Like, you're not, in one, there's a handful of examples which I can go through quickly. Number one, gold and silver, they both made lower lows in November. They went below their October lows, or their low at the very end of September. So the metals made lower lows. GDX, GDXJ, and SIL have not made lower lows. Like, they've made higher lows. And also, GDXJ in recent weeks has been much stronger than GDX. Now, SIL, the silver stocks, as you noted, they've been the strongest. They've been much stronger than GDXJ. Now, in addition to that information, Corey, GDX, a week or so ago, on a Thursday when we made that peak, the GDX advanced decline line was at a higher high. So it was at a higher level than when the market actually peaked at the very beginning of September. So the advanced decline line, we touched on it a couple weeks ago. It was showing a positive divergence because it was making higher lows. Well, almost 2 weeks ago, it made a higher high. Now, that in that indicator, it's not always right, but it usually is. It's usually very reliable. That kind of participation for a breadth indicator, you get that kind of strength during a correction, and it's come off a little bit, but it's still relatively strong. But just, you get that kind of strength during a correction, that's just very encouraging for what lies ahead. So I don't know how much longer this correction is going to go. Maybe it'll go a little deeper, maybe not in the miners. I'm not sure, but I like all these things that are developing here. These are very good signals for what's coming in 2020. Again, this doesn't mean that they're ready to blast off here in the next month or even the next couple months. We don't know about that yet, but I really like the action here, how they're holding up, given that we are in a larger correction for metals.
All right, so more of a medium-term bullish outlook, and still some question marks around this short-term moves. However, again, the stock's not breaking to lower lows is very encouraging. Jordan, what does a breakout in your eyes look like for GDX? Does that mean we go through that recent peak of just short of 31, or is there some other chart formation here that you would see as still considered a breakout?
Yeah, it's going through 31 or 32. I'm glad you asked that question, because anytime we see, what I should say is the breakout is a real overused term nowadays. If there's a downtrend for like a couple of weeks in a market who breaks above that line, people are saying, oh, it's a breakout. It's a huge breakout. I think a breakout, you really need to be, unless it's like a well-sustained downtrend for, beyond several years. A breakout is really when you're breaking resistance and you make a higher high. At least that's how I look at it. So yes, the big breakout will come when GDX breaks above 31 and 32. Now, more in the short term or medium term, Corey, the levels that we want to look at are probably those highs at the very end of October or the first day of September. So just about 28 for GDX and about 38 or 39 for GDXJ, and then for SIL that looks to be just below 31. So if the miners can break above those levels, that will signal that the correction for the most part is probably over, and that we're much closer to that big breakout. So like I said, I don't know how much longer this correction is going to last, and even if GDX goes a little bit lower than where it just was, That doesn't really concern me just because of all the other things I've mentioned. I really like how things are setting up, and I think we're setting up for potential really big move higher, that big breakout move in 2020.
Okay, interesting comments there, Jordan. I just want to get one more comment from you regarding the impact that the U.S. markets are having on the sell-off or downtrend in the precious metals. We talk a lot about Fed policy and how that is a crucial long-term driver, but when also we see equity markets, not just in the U.S., but also internationally, breaking to some levels, high levels for at least the year, U.S. markets all-time highs, that does take away a lot of attention from the precious metals. What's the role that the U.S. markets are having right now? Do we need to see the U.S. markets roll over to see a bit more stability, a bit more of an uptrend in the precious metals?
Very good question. Now, this is probably something, I mean, I'll try and answer this in a minute because this is something that I could really talk about and go on and on about. I think what we're going to see is I think we're going to see both move higher, and that flies in the face of what I've been saying for years and years, that we need we need the S&P to roll over. We need gold and gold stocks to outperform, and I mean that's really the key. I would first of all I would look at the ETFs against the S&P because the miners rather, because they appear to be leading the metals. They're outperforming. They're probably going to lead this next move higher. So forget about the metals for a little while and look at the miners. Look at the miners against the S&P, for example. Now, this is something that we know about the 2000s, Corey, in the 70s, where for the most part it was really a negative correlation that sprung the bull markets in precious metals. However, if you go back to the 1960s when gold was fixed, during the 1960s, and gold stocks performed extremely well. For most of the time then, you saw gold stocks and the S&P moving higher together. I know it's a little odd, but I think we could see the same thing in 2020. I think at some point, the market going higher and foreign markets going higher, I think that's going to include more so than technology. I think it's more so going to include money starting to flow into, the commodity sector, energy, base metals, and to a lesser degree, the mining stocks. And I also think, fundamentally, Corey, that the S&P going higher and foreign markets going higher, I think at some point that is going to contribute to rising inflation expectations. And this is different from what happened in 2017 and 2018, Corey. And I think we've talked about this before. The key difference is fundamentally, even though inflation expectations were kind of rising in 2017, the Fed was still hiking. Now, 2020, and maybe for some part of 2021, I think we could see inflation expectations rising, but the Fed is not going to hike rates this time. So you get that higher inflation, no Fed hikes. The yield curve steepens, real rates are still declining. So in that scenario, even if the stock market, foreign markets are rising, that's still bullish for precious metals. So that's a scenario where you can see both, gold stocks and the stock market do really well. I would focus a little bit less on gold, more so on the miners. And, last comment on that, Corey, if we see foreign markets and emerging markets really outperforming, which I think could happen, that tends to coincide with a weaker dollar, which, as we know, is really bullish for precious metals, especially when real rates are declining. So I know that's a lot to take in, but I think all those factors could contribute to precious metals and the miners specifically performing very well next year alongside the stock market. And, at some point, I think we'll see the miners outperforming the S&P, and that's what we really need to see and what you really want to look for. Because when that happens, that's when you get a real impulsive, accelerated advance in the miners.
All right, Jordan, good comments, and I think a very important comment to wrap up there, taking into account what's going on in other markets and the ability of gold to rally, or the gold stocks especially, to rally alongside the equity markets. Jordan, great chatting with you. Always interesting hearing your technicals. Everyone, you can click that link below. Go visit the Daily Gold and keep up to date with what Jordan is writing to his subscribers. Thanks for your time today, Jordan.